Hi, Joe Kehrig with the Kehrig Real Estate Team. And in this crazy market where we're seeing 5, 10, 15, 20, we just made an offer on a house the other day with 21 offers. We're seeing in some cases 40 and 50 offers on a piece of property. So I get asked a lot of times, Joe, how do you up your chances? What is the best way of getting your offer accepted? To be honest with you, there's no guarantees, but there's definitely things you can do to up your chances of getting your offer accepted. And so this is what I wanted to go through today. And, obviously, if you need any help at all, please reach out. And I'll give you my information at the end of the PowerPoint, the slides today. But obviously, you can just, if you're working with someone else, share this information. Chances are, if you're with a good real estate professional, they're doing all this stuff for you also. But just so you know, so when your real estate professional comes to you, say, oh yeah, that's okay, because that's what I also heard Joe say too. So how to win a bidding war. Number one, make sure your agent stays in good communication with the listing agent and what the seller is looking for. Remember, it's not all about price. So you have a situation where I will always call the listing agent, introduce myself if I don't already know him, and again, try to build a rapport with that agent. Because I will tell you, when we're on the listing side and we get 5 or 10 offers, we're the only thing I can't counter is the agent. Because if there's a good professional agent on the other side, and I know that they work with quality people and they'll be able to close the deal, if all things equal, they're definitely going to get the edge. But even some agents that have done everything right, where they call me, they introduce themselves, they want to know what the seller really wants out of it, that's impressive. And I, obviously, look at that when I sit down with the seller, because we can counter the price, we can counter the terms. We just want to make sure we have a good, solid buyer and a good, solid agent. And it's not all about the price. I will always ask, hey, is a seller looking for a rent back? What exactly are they looking for? And so you again, you can always counter the price, but if they want a rent back, give them a rent back, maybe a free rent back. And so, but the main thing is make sure your agent is communicating with the listing agent and understands what the seller wants, and not, sometimes they'll just say, hey, give us the highest price. Okay, well, great. Then that's really what they're looking for. But in most cases, there's all these little idiosyncrasies where you can put into your offer that the seller wants and increase your chances. Number two, love letters, good or bad. What's a love letter? A love letter is where you get the picture of the family and they sit there and they go, hey, we're moving up here, we're working here, we have 2 kids, we can see ourselves in your home, the kids would love playing in the backyard, et cetera, et cetera. So good or bad, I will tell you, the National Association of Realtors is kind of frowning on love letters. They're not illegal. And certainly if I'm representing the buyer, I'm going to put together a love letter. Because again, in a lot of cases, these people have lived in their home for a while, and they really do want to make sure, sometimes it's more important than money, that someone comes in there. And I almost said that a family comes in there, but that's where you have to be careful if you're representing a seller, because there are some agents out there that will not take love letters. They'll tell you, hey, no letters. But as a buyer, I would always prepare one, because you know what? They do work. I've been on the listing side over and over and over again, that sometimes the letters don't mean anything, but sometimes they'll really sway a seller. Now, why don't a lot of listing agents take them? Because in our world today, you have to be not just today, you have to be very careful as far as discrimination in any way, shape, or form. So in other words, if you have a nice picture of a family and there's like 3 little kids, and the seller goes, oh, I just love that, our kids were that age when they moved in, I really want to sell it to them because they're a family. And you have another couple that basically make an offer on a home that don't have any kids, and you basically sway over to the family because they have kids. You have to be careful. Now, maybe that's the highest offer, that's fine, but in some cases, sellers will sit there and go, I want to sell it to a family, and I'll take less money. Well, that's discrimination, because you're discriminating against someone who doesn't have kids. So love letters, I always encourage them if we're working with buyers, but if an agent's representing the seller, understand that sometimes they'll say no, because they don't want to put in the seller in the situation that they might, without meaning to do it, be discriminating against the other offers. So number 3, make sure your financials are in order. This is a slam dunk. I mean, you have to be pre-approved. And the lenders that we work with are local lenders that people know. So even if you come to us and say, hey, I got approved with Rocket Mortgage on the online, which, they're the number 1 mortgage company, but, working online with someone and never really, sitting down with them or going face to face, sometimes, us as real estate listing agents, online approvals aren't as good as just someone that we know that we can pick up the phone and talk to. So even if you come to me and say, I'm approved with Rocket, I'll say, hey, please sit down with one of our local lenders, that we have confidence in, that other agents know. You don't have to use them. And you might find that worst case scenario, they got better rates and you go with them. But if you still want to go with your main, go with your main. But then when, you submit an offer, you have to have that pre-approval letter. Sometimes now with COVID, you have to have the pre-approval letter to even see the property. So in this case, you basically have your pre-approval letter. And if it's coming from a local real estate professional, matter of fact, what we do is when we submit an offer, our lender will proactively call the other agent, the listing agent, say, hey, I'm representing Joe's clients. They're great people. And it just makes you feel, number 1 is you sit there and go, hey, that's a great loan agent. Number 2 is, hey, that's a good real estate agent. And number 3, you find out that people are well qualified. So when you sit down with you people and say, hey, I actually spoke with this lender. So again, make sure you get your financials in order and hopefully use a local, strong real estate agent and along with a strong real estate lender. Number 4, limit contingencies, but don't hang yourself out to dry. Appraisal-Loan-Inspection. So when I say hang yourself out to dry, now what we're trying to do is we will try to get all the inspections up front. So a lot of times buyers are comfortable waiving the appraisal contingency or the loan contingency, but it's really difficult to waive the inspection contingency, especially on an older house if there's been no inspections done. So what we will do is we'll get all the inspections up front. So literally you get 5 or 6 offers. We'll have a couple offers that remove all their contingencies up front, which is great. We basically, lay out the table that way that they can do that. But we're actually seeing some buyers where, for whatever reason, the seller didn't want to do the pre-inspections, we don't have them, and the buyer still removes all the contingencies. And that's really chancy, to remove contingencies without, having inspections. And you might hang yourself out to dry. But the other thing is like appraisal. So, because remember, if you buy a home for $2 million and you're putting 20% down, you're putting $400,000 down and it only appraises for 1.9, they'll still give you the 20% of that 1.9, but you got to come up with the extra 100,000. So as a listing agent, I always want to make sure, hey, do you have enough reserves? Because a lot of times people will remove that appraisal contingency up front because normally you have to. If you're offering more, it's pretty standard that you remove that appraisal contingency. And let me tell you why. If I'm asking 1.8 for a property and you bring me an offer of $2 million, why should the onus be on the seller to get it appraised for $2 million when they were only asking 1.8? So you take away the appraisal clause, and what if it only appraises for 1.8? You got to come up with the $200,000, and if you can't, you're going to lose your deposit if you've taken the appraisal contingency out. Again, it's a necessary thing to do in most cases, but you just want to make sure you have enough reserves to be able to make up the difference if the appraisal doesn't come in, if you're going to remove that contingency up front. So next, be realistic about market conditions and have a strategy. Not so much anymore, but you can still use a thumbnail of 1% per offer. So if you have a house that's $1.5 million and you get 10 offers, you can basically know that you've got to be 1% for times 10 offers. Basically you have to be, 10% higher. So you have to be on $1.5 million asking price. You have to be like $1.65 million to even be in the ballpark. And you have to know. So when you're looking at homes, so if you have your real estate professional, what we'll do is sit there and say, okay, Joe, we're looking for $1.5 million. And so what I'll basically do is we'll show them what's out there from $1.3 million to $1.4 million, knowing that it's going to take $1.5 million or more, to purchase those homes in this market. And if we do go up to $1.5 million, we'll let them know that, hey, understand that, you're probably going to have to pay $1.6 million, $1.7 million for that $1.5 million home. So again, we always sit down and we always talk about market conditions, with our potential buyer. And, so there's no surprises there, because some people are still surprised you have to pay more than asking, and a lot more than asking in a lot of cases. As if you look at my other videos where I do market updates, you'll see that things are selling for 110% of asking on average. So number 6, use a ladder approach to decide the offer price. Know when to walk away. So what's the ladder approach? Well, this is if I was sitting down with you, and let's say you wanted to purchase a home for $1.5 million. And let's say, they were asking $1.5 million, and we knew it was going to take around 1.6. So you say, okay, let's write at 1.6. And I know that there's a lot of offers, and I know it very well might go above $1.6 million. Then I would sit there and say, at $1.6 million, I think you have a 50-50 chance. But let me ask you this. If you were to sit there and let's say it would have taken $1.620 million, and you lose it over $20,000, are you going to kick yourself? And if the buyer says, yeah, I'm going to kick myself, then I'm going to sit there and say, okay, well then offer the $1.620 million. And now I let the buyers know. It's not like I'm trying to trick them. I let them know, and I talk to them about this ladder approach, that when it comes down to it, we're going to be doing that. And why we're doing it, I let them know. Then I sit there and go, okay, well, let's say, for instance, it would take $1.640 million. Are you going to kick yourself by not offering $1.640 million over $1.620 million? And they go, yeah, we would kick ourselves. And I would sit there and say, okay, well, let's offer $1.640 million. In other words, put your best foot forward, because when you have multiple offers, it's not like, well, have them give us a counter. No, you normally in this market have one bite of the apple. You're only get one shot at the property in most cases. And then I'll do it again, maybe $1.660 million. But at some point, the buyer is going to say, Joe, at $1.660 million, we'd be disappointed that we didn't get the house, but we're not going to kick ourselves. Then great. Then you're at $1.640 million. So we talk about it like, climbing the ladder. So, but you have to know when to walk away. I mean, at some point, it just doesn't make financial sense. Now, if it's a home that might not come up again, if it's a dream home, there's always exceptions to that. But number 7, don't neglect the backup offer. And this is why that I always encourage people to do backup offers, because what happens in this market a lot, and we have to be careful of it when we're listing agents, we get 8 offers. And let's say, 6 of the offers are between $1.6 million and $1.65 million. Then we get this one offer, and this is happening a lot. We get this one offer for $1.75 million. And let's say there's still contingencies in that offer. Well, what we have found, and we really saw it during the old REO days, where the banks would always allow contingencies for people to do their inspections. We get these wild offers that were way higher. And I will tell you, when we got one of those, there was a 50% chance it wasn't going to go through, because all the buyer's doing is they're reserving the home, then to find out, then decide after they have a weak contingency, they just reserve the home. And then they come back and they sit there and say, no, I decided I don't want it. And now you've lost that momentum of first putting it on the market, and you've lost all those other offers. So you have to be really careful of, getting those high offers. Now, as a buyer, let's say you lose out on the home. Let's say in that scenario, you made an offer of $1.65 million, and some wild guy came in at $1.75 million. Well, ask, can I be in backup position? And if they allow you to be backup position, sometimes they'll be fine with the $1.65 million. Sometimes they might counter you at $1.7 million. But the backup position means if something happens with that offer, you're automatically in the game. It's automatically you're in contract. So you make a backup offer of $1.65 million. That first deal, the buyer backs away, and you're automatically in. There's no more negotiations. You're offered $1.65 million. Then you're in all the time periods start when that first offer backs away. Now, at any time when you're in backup offer before that one backs away, you can pull out. You don't lose anything, nothing happens. So always being in a backup position, I always encourage, buyers to be in backup position. Having said that, as a real estate professional, the tough part about that is we always keep up. The minute we know that that first buyer has removed all their contingencies and that deal's solid, we get it removed, because what happens, it's hard to sell if they have their mind set on that home and their heart set on that home, and they're in backup position. It's hard to sell them anything else, because they will obviously say, no, 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 I want to wait to see what happens there. So the minute that their main buyer firms up, we'll remove that. We'll back out of that agreement just so we can clear our buyer's mind so they can go purchase something else. And this goes along with knowing when to walk away, know when to opt out. Again, you want, in this market, you're going to have to pay more than asking. You're going to have to pay. Every home that's selling is selling more than any of that model ever sold for. That's just the way it is. But at some point, you have to sit there and go, okay, at what sense does this not make sense for me? That's why we always encourage people, if we sell your home first, which it's almost impossible, we have to do because it's almost impossible to get a contingent offer accepted, then if we sell your home first, we always tell people, make sure you have a plan B. We always try to get a rent back situation, but even making a second move or double move, and I know no one wants to make a double move, but we tell people, it's financially the best thing to do, because if you make a double move and you're in a rental for 6 months, I'll be honest with you, when you find your dream home, and now you can find your dream home because you have the time and you're not pressured, not only do you get a better price, but a year from now, 2 years from now, you're not even going to remember that 6 months and that double move. All you're going to remember that you're in your dream home. So if there's any way that we can help you out, again, Joe Kehrig with the Kehrig Real Estate Team, 925-487-6838, joe@kehrigteam.com, or visit our website at www.kehrigteam.com. And if you like these videos, please tap the like button and hit the subscribe button, and then click on the bell if you want to receive alerts on new videos. So hopefully you're all safe with the vaccine getting out there, but stay safe, be smart, and may God bless you, and may God bless your family, and may God bless the United States of America. Have a great week.